Welcome back to another video, everyone. So in this video, we are going to break down head and shoulders patterns. So we are going to discuss what are head and shoulders patterns, types of head and shoulders patterns, and how to identify and trade the head and shoulders patterns. So let's jump right into it. So what are head and shoulders patterns? These are trend reversal chart patterns that are formed with three peaks. The outside two are close in the height, and the middle is the highest. So basically, a head and shoulders pattern looks something like this. It's very similar to a triple top, but the middle top or the second top has a higher peak, right? So I'll break that down. Now, before I break it down, I want you to understand there's two types of head and shoulders patterns. One is just a head and shoulders pattern, and the other is an inverse head and shoulders pattern, right? It's the opposite of the head and shoulders pattern, it's flipped around. So let's break the first one down. So head and shoulders pattern. It's a trend reversal chart pattern that is formed by a peak, known as a shoulder, followed by a higher peak, right, known by the head, and followed by another peak known as the shoulder. The stock starts as an uptrend. It has to be going in an uptrend. Once it formulates this pattern, the uptrend now starts reversing. The pattern is completed once the stock breaks the neckline. Keep in mind, that's the neckline. Very similar to the double top, triple top, double bottom pattern. It needs to break the neckline for the pattern to be in effect. So basically, stock goes on an uptrend, hits the first high, pulls back, establishes the neckline. The second move up, the stock moves higher, right? Instead of a triple top, how it moves around the same level, in a head and shoulders pattern, the second top moves higher. Stock pulls back to the neckline area, goes back up, tries one more time, forms another shoulder, and boom, we see a breakdown. Remember, the breakdown is in effect if and when the stock breaks the neckline. Very, very important to understand that. So now let's look at an example. So if you guys look at this example real quick, you'll see stock is on an uptrend, formulates the first shoulder, comes down, formulates and establishes the neckline, goes up higher than the last shoulder. You can see the head is now formed. Stock now comes back, retests the neckline area, formulates one more shoulder, breaks out. Was that a strong breakout? Yes, strong breakout. You can see volume is picking up, very strong breakout. Stock moves down, and now this is where it kind of gets interesting. Instead of it just selling off and breaking down, what does it do? It now retests the shoulder. It's now retesting the neckline and then continues the sell-off. And look at that sell-off, strong sell-off. Sometimes, right, you guys might see a retest. Sometimes you guys might see a stock breaking down and then retesting the level it broke down from, and then the continuation happens. You as a trader need to understand your trade kicks in here. Let's see where your trade kicks in. You're taking your trade, right? You're setting your stop loss. All those things are set out. But sometimes if it is retesting, what you can do as a trader is keep watching and seeing if the sell-off continues. If the sell-off continues like this, you now have a higher confirmation. You can always add more. You can see strong sell-off going on and take the trade from there. You can see it breaks the $25 mark, right? Retest the $25 mark and sells off all the way to about $18, $17. Nice head and shoulders pattern on a daily chart on this one. Here's another example. Now this one's a little bit different. You can see stock goes on an uptrend, right? Formulates the first shoulder, comes back to the neckline, formulates the head, comes back to the neckline, formulates another head, and then you can see breakdown, retest, and continuation sell off. Now, if you notice something about the neckline here, you'll notice the neckline is not straight. Now, what you have to notice is the neckline will not always be straight on a head and shoulders pattern. Sometimes you may get a trend line. That trend line also works as our support level, also works as our neckline area, right? So if that gets broken, as you guys can see, it gets broken, strong break, look at the volume, right? Strong volume, strong sell-off, nice red candle, retest around that area, doesn't have to be perfect, boom, continuation sell-off. right? Now, if you notice something else as well, you'll notice that these patterns are not perfectly shown the way you guys see in textbooks, right? They're not perfectly shown like you see in textbooks. So what you have to understand is you have to understand the context behind these patterns. What is happening in these patterns? What is the psychology behind them so you get a deeper understanding? So what's the psychology behind the head and shoulders pattern? So the psychology is as the price falls from the market high, this is the market high, the head, right? Sellers have begun to enter the market and there is less aggressive buying. So maybe short sellers are stepping in as the stock maybe gets lower and is unable to go to a higher point. Buyers are getting weaker. There's more people shorting or people just exiting their position, right? Next, as the neckline is approached, many people who bought in the wave higher or bought on the rally, right, in the right shoulder are now proven wrong. On this shoulder, they are now proven wrong and are facing large losses. It is this large group that will now exit positions, driving the price lower. So basically, there's people that bought here, people that bought here, right? Stock goes up, they maybe added more. Stock goes down, and now it doesn't continue. After it gets rejected here, these people are now panicking. So what's happening is there's profit taking, or people that were up, they're profit taking. People are panicking, people are taking profits off the table, cutting the losses, whatever the case is, because some people maybe got in here. Some people got in on the break here. A lot of different situations could have happened, but the whole idea is once this starts forming the shoulder, there's not a lot of interested people here anymore. And now if this breaks the neckline, if it breaks the support area, there is a high possibility that this stock may continuously keep going down. That is the psychology behind the head and shoulders pattern. Now the next pattern we have is the inverse head and shoulders pattern, which is the opposite of the head and shoulders pattern. This is a trend reversal chart pattern that is formed by a low point, which is known as the shoulder, followed by a lower point, which is known as the head, and then another low known as the shoulder. The stock starts as a downtrend. So stock starts as a downtrend. The pattern is completed once the stock breaks the neckline. Neckline is very, very, very important. Do not forget that, guys. Once again, stock goes down, formulates the shoulder, retest neckline, makes a lower low known as the head, goes back up, retest the neckline, comes back here, comes back and forms another shoulder, and then you see most likely a continuation or a breakout which reverses this trend. Let's look at some examples. So right here we have an inverse head and shoulder on a 5-minute chart. Right, so this is a 5-minute chart. Each candle represents 5 minutes. You can see stock goes down, formulates the first shoulder. Stock picks up, gets rejected by the neckline. Neckline is now established. The neckline is the same level the stock broke down from, right? And this is the same level the stock is getting rejected from. Goes down, formulates a head. You can see it's lower. Stock goes up, gets rejected by the neckline. Now, what do you notice about the neckline here? It is a trend line. It's a downward trend line. It's not a perfect line. You can see gets rejected, formulates another shoulder, and then breaks out, strong volume, showcasing a strong move up. Even if you don't want to take the trade here, that's totally fine. You can always take the trade on the break of this resistance point. That would be a higher confirmed and higher probability trade, and you can see stock starts reversing. One more example, a little bit cleaner. You can see stock goes on a downtrend, formulates a shoulder, retest of neckline, formulates the head, retest the neckline, formulates a shoulder, boom. Right, very clean pattern here. You have to understand they're not always going to look clean. Sometimes they're going to be messy. But the whole idea is understanding the format behind it. You can see the head is far more out. The shoulders are relatively the same. And that the neckline doesn't always have to be straight. It can sometimes be slanted. Right? It can be a trend line. Now, what's the psychology of inverse head and shoulder? Right? As prices fall from market low, right? As prices fall to a market low, buyers have begun to enter the market and there is less aggressive selling, right? Next, as a neckline is approached, many people who shorted in the final wave, lower or shorted on the decline in the right shoulder are now proven wrong. and facing large losses. It is this large group that will now exit positions, driving the price higher. So people probably shorted, people probably shorted here. As you see, the stock is holding. They're now covering. They're now exiting their short positions, which is bringing in buying pressure. Now that buying pressure becomes very extreme if the stock can break that point. If it breaks that point, we get an extreme high probability that the downtrend has now ended and we are now about to go on an uptrend, or the stock is possibly going to go higher.